Have you ever wondered why banks are always in massive glass towers with billion-dollar profits, while the average person struggles to save a few $100s? What if I told you that banks aren't just holding your money, they're using it in ways you probably never imagined? Today, we're going to expose the hidden secrets of the banking system. By the end of this video, you'll never look at your bank the same way again. Let's start with one of the biggest myths. Your money is safe in the bank. When you deposit $1,000 into your account, you might think that money just sits there waiting for you. But in reality, banks only keep a fraction of your deposit. This system is called fractional reserve banking. It means if you deposit $1,000, the bank might only keep $100 of it in reserve. The other $900, they lend it out to someone taking a loan, a mortgage, or even a credit card advance. So if everyone went to the bank right now to withdraw their money, guess what? The bank wouldn't have it. That's why when there's panic, banks collapse. Like what we saw in 2008 with the Lehman Brothers, or more recently with some regional US banks. The illusion is your money is always there. The truth? It's not. It's constantly being moved, lent, and risked, while you earn pennies in interest. In fact, here's another secret: banks don't just make money from loans. They make money off you. Interest spread. They pay you 0.01% on your savings, while they lend your money at 5%, 10%, or even 20% on credit cards. That difference, called the interest spread, is pure profit. All types of fee like ATM fees, overdraft fees, minimum balance fees, late payment fees, the list goes on. In fact, U.S. banks collected over $30 billion in overdraft fees alone in recent years. Ever notice small, strange charges in your account statements? Banks sometimes allow transactions they know will overdraft your account, just so they can charge you a penalty. So while you think your bank is just holding your money safely, it's actually a profit machine designed to extract as much value from you as possible. Now let's talk about one of the bank's favorite tools: credit cards. Banks advertise rewards, cashback, and air miles like they're doing you a favor. But here's the reality. The average U.S. credit card interest rate is over 20%. That means if you owe $1,000 and only make minimum payments, it could take you years to pay off, and you'd end up paying double or triple the original amount. Banks know most people won't pay in full each month. They want you in debt because debt equals profit. And the craziest part? The rewards programs are designed to make you spend more. That free flight you earned probably cost you thousands in unnecessary purchases. Here's a scary truth. Banks don't actually want you to be financially free. Think about it. If everyone paid off their loans, cleared their mortgages, and stopped using credit cards, banks would collapse overnight. Debt isn't a side business for banks. It is the business. Mortgages are 15 to 30 years of guaranteed payments. Student loans keep young people tied down for decades. Car loans and personal loans keep the middle class locked in cycles of repayment. Banks thrive when you're in debt. They don't want you rich. They want you reliable enough to keep paying. Here's where things get interesting. Banks and governments are deeply connected. Governments borrow money from banks through bonds. Banks create money through lending. And central banks, like the Federal Reserve, set the rules that benefit large financial institutions. That's why in 2008, when banks failed, governments bailed them out with taxpayer money. Did they bail out the everyday person drowning in debt? No, they saved the banks because the system itself depends on them. So the real secret? The system isn't built for you, it's built for them. All right, now that you know the secrets, what can you actually do about it? 1. Educate yourself. Financial literacy is the bank's biggest enemy. Learn how money works, how interest adds up, and how to avoid traps. 2. Don't rely on one bank. Use credit unions, online banks, or fintech apps that offer better rates and fewer fees. 3. Pay off high-interest debt. First, credit card debt should be your top priority. It's the most profitable trap for banks. 4. Invest your own money. Instead of letting the bank invest your deposits, put your money to work in index funds, real estate, or side businesses. 5. Build multiple income streams. The less you rely on banks for loans, the more freedom you have. Remember, knowledge is power. The more you understand how banks operate, the less control they have over your financial future. So, the next time you walk past a shiny bank tower, remember, that building wasn't built with the bank's money, it was built with yours. Banks aren't evil, but they are businesses designed to profit from you. And if you don't understand their secrets, you'll always be the one paying. If you found this video eye-opening, hit that like button, subscribe for more money and finance breakdowns, and share this with someone who needs to hear the truth about how banks really work. Because the first step to financial freedom is knowing the game.